Hey guys, Corey here. Welcome back to the channel and thank you so much for stopping in. If you haven't already and you enjoy the content, be sure to give me a thumbs up as it greatly helps the channel, and subscribe if you haven't already. Tap the bell. This way you guys know when I post new videos. Today we're going to be talking about Tesla. Before we jump into Tesla and talk about the stock itself and what's going on, we have to discuss one simple thing. Actually, one simple word: autonomy. The right or condition of self-government. You see, Tesla is an EV auto manufacturer, right? Well, yes, but they're not just an EV auto manufacturer, and the reason why their stock went north of $800 or even $1,000 per share just a few short years ago. Now, the reason why Tesla stock price was so high is not just because they're any EV manufacturer, and not just because they produced a lot of cars or had a lot of sales, or even because Elon Musk started the company and was tweeting and talking about it all the time. No, all of these are great things, including the cash flow and the revenue that Tesla has. But the big thing is, and the reason why the stock price went so high, just like AI stocks have, is because Tesla has been pursuing autonomous driving, which is self-driving and automatic driving, self-governing vehicles, so to speak, what the word autonomy means. Not only that, Tesla is not just an EV auto manufacturer. They are a data hub, a data center, data collection king. They collect all the data from every car they sell, from everyone driving, every turn, every driveway, every stoplight, every red light, every time you run through a red light, every time you stop or back up your car, how far you are from obstacles when you're backing out of your driveway. Whatever you're doing, it's being stored and uploaded to Tesla all the time. They have a way of collecting all of this data to make their autonomy in their vehicles better, which is what they're going for. So the reason why Tesla stock was so high compared to the EV auto market is because of the autonomy and the driving AI in the autonomy for their vehicles. And not only that, the data collection. You got to remember, the most valuable piece of information in a company's cash flow, or overall in a company in general, that anybody in the world that has money is willing to pay for, is data. For example, if you were looking to get into the soda business and were trying to sell your very own brand of a cola, and you wanted to know who was drinking Coke or Pepsi, and you wanted to know the age brackets of which city had higher sales than others, and I told you I had 10 years worth of data stored and had all of your answers to run your business, I could sell you that data as proprietary information. Tesla was very valuable in 2020 and 2021 as people started to realize, like investors and hedge funds and anyone who was just coming along and didn't know it before, you got to understand the market, the business, and finance in general to understand the stock market and to understand investing your cash, which is why when Elon Musk brought up the auto taxi coming up on August 8th, the stock price jumped over 5% and it got people talking about Tesla again. The reason why Tesla has been selling off the last couple of years is there was inflation during the pandemic, like every other EV auto manufacturer. However, why are they all $20 to $30 or less and Tesla was well into $1,000? Because they are a data acquisition company. This is the key core fundamental of the business and why their core strength is well beyond EV auto manufacturing. Look at Rivian Automotive, $10, NIO, $5, Lucid Motors, $3, Fisker, damn near bankrupt. So when you look at this, how is Tesla still at $170 a share? And Tesla has such a strong future with autonomy and autonomous driving, we will likely never see Tesla below $100 again. And if that was to ever happen, I'd be selling nonstop puts. I'd be sitting there just wanting to sell puts to get into Tesla if it ever fell below 100, to the point where money would just be presenting itself to me and I'd be like, nope, can't do it. Tesla's at a rock bottom, can't do it. All right, you win. I'll sell the puts. I'll collect the money. Juicy premium. Time to get in. In fact, I'm going to show you a strategy that you can sell puts on Tesla, even if your account only has $250 in it. So let's get going. One thing I want to touch base on real quick is Craig Irwin at Roth Capital, who said that, and I quote, that the stock is not rooted in fundamentals and has a neutral stock rating of $85 price target. You know, respectfully have to disagree with that. I don't know where that's coming from. They have plenty of core fundamentals, data acquisition, autonomous driving of the future, AI, and Elon Musk is a pretty smart guy, so who am I to judge the direction he wishes to take his own company? I wish them well, and right now, I believe that Craig Irwin is incorrect on his price target. My current price target on Tesla is $140, $150. That's where I would like to get in on Tesla, but I'm not even sure that's going to come to fruition at all. If August 8th is a hit and their next earnings is good, Tesla's not going to be going below 140, I don't think, or even 150. It's just going to start going back up, which is a good thing for current investors. Now, I just want to point out that I'm not a financial advisor, and this isn't financial advice. I'm just giving you guys coaching on strategies, risk management, and my overall personal opinion on stocks, and just showing you guys how you can better make money safer in the market. However, it is up to you to decide which stocks you want to buy, how much money you want to put into those stocks, and where you would like to invest your money. Okay, looking at Tesla here on the chart, you might be saying, hey, Corey, Tesla hit a high of $413. What are you talking about? They never hit 1,000. Well, they did, and I'll explain why. When we look back here into August of 2020, we see a split of 5-1. You have two different types of splits. You have a reverse split and you have a forward split. A reverse split is when the stock price is low and you want to increase it, you combine shares. For example, if you have 100 shares at 10 cents, a 10-1 reverse split would mean that you now have 10 shares. With a forward split, it's the exact opposite of a reverse split. If you have 100 shares worth $1 each and it's 10-1 forward split, you now have 1,000 shares at 10 cents. Tesla did a 5-1 forward split, meaning the price of the stock at this date right here shows it was at $154. So what we would do is we would times 154 by 5. The price was actually $770. The price up here was $414 in November of 2021. However, over here, they did another forward split, 3-1 on August of 22. So the price right here in November of 21, that was around $420. So $420 times 3 shows that Tesla actually had a peak of around $1,260, which is pretty darn crazy if you ask me. Now, looking at this chart, you'll see overall that Tesla's not really in a bad spot. They come all the way up. I don't count anything in the pandemic. I always cut that out. So from here to here, I cut that all out. Only around here is where, I pretty much will start counting real trading. It took a lot of recovery, but I don't really count anything from August of 21 all the way to November 22. So right around here, it's recovering, and now we're into full recovery. So this whole area right here is about the same as everything before the pandemic. Therefore, Tesla's really not doing anything out of the ordinary. It's trading between $150 and $300, which is exactly what it was doing before the pandemic. So Tesla's doing what it was already doing prior. We can't keep factoring in 2021 or 2022. It was crazy times, inflation, all kinds of craziness. It was a very big bull market, then a bear market, then a recovery, then a recession we were afraid of, all this stuff. We got to get past all that. Once we get past the new year of January 2023, the last year has been fairly stable in a downward trend. Now, we're looking at the daily chart right here, and I will draw a trend line for you. And Tesla has already peaked down here, so we draw another line just like this. And we are about to see ourselves on the verge of a nice little breakout. It's looking like, you see what I'm saying? This is the direction that I believe Tesla is headed in, somewhere between here and here by the summer. So it would not surprise me if Tesla was retesting the $260 level by the end of summer. Is that going to happen? I don't know, but I do feel very bullish on Tesla. And the most important thing that I look at when looking at stocks is what? You guys know what it is if you're watching my channel: cash flow. Cash flow is king, and that's what we're going to look at right now. We're going to head over to the financials. Next earnings report is April 23rd, so stay tuned for that. Very important. Neutral on the technical, neutral on the analyst rating. 197 is 1 year price target. I do agree, except I'm more bullish. My 1 year price target is around 220. 200 to 220. I would like to see it somewhere around here. It's going to recover. Let's go ahead and look at more financials. So we're going to go ahead and look at Tesla's earnings. 16 billion, 21, 24, 23, 24, 23, 25. Very stable income. Year over year growth is better in some quarters than others. But overall, pretty stable. Gross profit, 4 billion, 5 billion, 578, 451, 453, 418, 444. Last 2 quarters, slightly down. Operating expenses, 1.6, 1.69, 184, 185, 213, 241, 237. So the operating expenses are more now than they were in 2022. Operating income, they have had some serious issues here. 261, 369, 394 is amazing. 266, 24, 176. Ooh, then they recovered to 206. So operating income, 261, 369, 394. Very nice. 266, 240, 176. Rough. Very rough. But then back to 206. So they're recovering. Last quarter was a recovery quarter. Not as much as we wanted, but pretty good. Pre-tax income, very important number. 247, 364, 398, 280, 294, 205. Not a very good quarter here. 219, slightly improved. April 13th, they have got to have an earnings of pre-tax income closer to 2.94. If they can be around 2.5 billion, which is between the last quarter and the quarter 2 of 2023, they really got to be between 2.19 and 2.94. If they can increase their pre-tax income above 2.3 or 2.4 billion, we're working ourselves in the right direction with Tesla. Net income, pre-taxes before taxes, net income is total net income. 2.26, 3.29, 3.72. That's a very good quarter. 2.52, 2.7, 1.85. Very, very bad. However, the last quarter, 7.93 billion. That is very good. In fact, the best quarter they have had in a very long time. In fact, I wouldn't be surprised if it's the best quarter they've ever had. Very good net income. Their EBITDA, 3.5, 4.6, 4.92, 3.7, 3.5, 3, and 3.3. This number, not as good as I would like to see it. Tesla should be around 3.7 to 4 on this number or even higher. EBITDA is income before interest, taxes, depreciation, and amortization. It's a key metric in determining a company's true potential for growth and profitability and cash flow. And we look at the EBITDA growth, 3.3 billion is down 33%, up from the previous quarter, but the quarter before that, it's down. In order for Tesla to really shake things up on the next earnings call in a few weeks, they really need to get this number up from 3.3 to 3.5 or 3.6 billion. If they can do that and have a good pre-tax and net income with an improved EPS, Tesla is going to the moon. All right, so how do we get into Tesla? Let's take a look at rock bottom and find out where we're going to go ahead and get in. With Tesla, I would love to get in around $160. I don't think Tesla's going to be going down that low because we're looking at the Bollinger Bands right now. And I'm going to look at Bollinger Bands, and my settings are 20 on length, which is 20 days, the previous 20 trading days average, and a standard deviation of 2, which takes into account 96% data, meaning the top and bottom of the Bollinger Bands will illustrate a 96% accuracy. So when it shows this bottom band right here at $162.39, it's 96% chance likely that it will stay above that price. So Tesla is also very volatile at times. If we go to a standard deviation of 3, you'll see the Bollinger Bands expanded. Now that encompasses 99%, which means $157.58 for the next week is 99% likely to happen. So if we're going to sell a put over the next week, 99% chance of success as long as the put is below $157.58. That's pretty extreme considering earnings is not close enough yet. Next week and the week after, definitely want to be running standard deviation of 3. However, standard deviation of 2 right now is plenty. So we can see that the bottom is $162.39. So we're going to want to sell a $160 put, maybe even $162.50 put. Let's go take a look at them on Robinhood. Okay, I'm going to click on sell and put expiration for April 12th of this week. If you're watching this in the future, it'll be the exact same strategy, but you can change the expiration date to whichever date you choose. Remember, using the daily chart with the Bollinger Bands is only good truly for a week or 2 out. If you're going to go 3 weeks to a month out, use the weekly chart. So we're looking here at 162.50, which is right where the Bollinger Band is at the bottom. 13 delta is definitely safe. Anything between 10 to 15 delta is premium. Anything between 10 to 15 delta is safe. Sometimes you can go more aggressive. We could sell 165 put because if you're looking to get into the stock at a discount, 165 is definitely doable considering the Bollinger Band is at 162. It's highly likely that you could get away with this trade because it's only an 18 delta. If we click on sell this put, click continue, we could collect about $68 for that put. However, if you're looking for something a little bit safer, we will go ahead and sell the $160 put, which will get you a net net premium of $45. If you end up going with the safer bet, $157.50, you can see the premium is not that good, only $31. In my opinion, right now, the way the market is, the really good but safe play is $162.50. This is 87% chance of success, 13 delta, and you'll collect $68. If you want to be safer, you can collect $45 on the 160. If you'd like to be a little more aggressive because you really want more juicy premium, 165 is still generally safe. It's under 20 delta, and the implied volatility is at 54%, meaning it's 50% is the median average. It's barely above average implied volatility, so you can get away with selling a 165 and collect the juicy premium of $104. That is a really good return per week, $100 a week just selling puts. And if you could do this 8 weeks in a row, you're getting in at an $800 discount, which is amazing. So you can see why selling puts is an awesome strategy that is very safe, because if you're afraid to get assigned and Tesla was to drop to $165, you can just roll the option out a week or two further in time and roll it down in strike. And I always say puts, I love to roll out and down because you can just collect more premium. Let me show you. So I've got a put on Upstart. I originally sold a $26 put, collected $71 juicy premium, rolled it out 2 weeks from April 5th to April 19th, and rolled it from $26 put down to $25 put and collected another $19 in juicy premium. So I am into Upstart for $90 total credit over 3 weeks. And you can see Upstart recovered and went back up to $25.32. And this position is now in the green 30%. I'm up $57 of juicy premium. And all we have to do is wait it out for the next 2 weeks. And when it expires worthless, I can then yet again sell another put. I will probably wait until about 2 hours for expiration, and I'll show you exactly what that looks like. Click on roll. I'm going to add myself maybe 2 more weeks, and then I'm going to roll it out at 25, which if I was to do right now would net me another premium of $196. However, if I decided that I wanted to roll this put out and down to $24, this way I could average cost down, then I would collect a credit of $140 premium. And all I'm doing is sitting around for the next month collecting that juicy premium. If I don't want to go out for a month, let's just say I want to go out only for an extra week or two to May 3rd, and I want to roll out because the price has stayed above 25, then I can roll out for another $89 juicy premium. If I want to roll out and down from 25 to even $23 in case I feel Upstart's going to go down and I'm going to get assigned, I want to get assigned at a much lower strike price, I can pick 23 and still collect a $3 credit. And this way I have a lower strike price. And that works wonders if the stock price ends up going down. You may be asking, Corey, how do I sell puts on Tesla? I only have $1,000 in my portfolio. Some of you might only have $500 and others may only have $250. Let me show you how you can sell puts on Tesla with a portfolio as small as $250 capital. So we're going to go to Tesla. We're going to click on options, sell put. We're going to come back down just like we did previously. But if you have a smaller account, we're going to click on the $165 put. But then you're thinking, okay, but I need $16,000 collateral as highlighted by down here. Well, there's one more step that we have to do to offset that cost. Click on buy, make sure you're on put, same expiration. We're going to step down one leg to the $162.50 and click on buy. Now you can see your max loss is capped at $214 and you're going to collect a juicy premium of $36 and you only need a collateral of $250. This right here is a very good return on investment ROI or profit because you're making $36 on $250, which is essentially a 12% return in less than 4 days. That is insane. Now, if you have a $500 portfolio, you can go down to 160 and click on the 160 to buy that one. And now you're making $59 on 500. The reason why you're making more money is the put that you sold is $102. The one you're buying is $46 instead of $70. So you're spending less money. Also, your break-even price is lower. It's $164.40 $1.6441 because the spread is wider and the credit is bigger. Therefore, the break-even price is lower and therefore it is safer. If you have a $1,000 portfolio, we will go down to the $155. Click on buy and you will see we're going to collect $82. We'll click review order. You're collecting 82 on 1,000, which is just under 10%. However, your break-even price isn't 164.41, it's 164.18. So it's much better to have $1,000 spreads. But if you have a smaller account of $500 or even $250, this is the trade to execute on Tesla. One quick thing that I want to point out for you guys is you can also get a little greedy, which I don't mind doing from time to time, especially considering puts are very safe. Let's say we think Upstart's going to go to $26, even though we have a $25 put. We can go ahead and we can roll that put out and up just to get more premium. If we think Tesla is going up, we're using Upstart as an example, and we think the stock is just going to keep going up, then I could roll out and up to $26 just so I could collect more premium. So I would roll out another week or two to May 3rd to 26, and I would collect $140 premium instead of collecting $38 premium or $89 premium. I'd be able to roll out and up and collect $140. And if the stock is on the rise, we can keep selling those puts, rolling out and rolling up in a bullish strategy, collecting all this amazing and extra juicy premium. A month or two down the road, I'll have collected over $500. So if I get a signed at 26 instead of 24, I'm really only averaging 2,100 for the 100 shares. You really cannot lose if you're selling puts on quality companies. I just want to thank you guys so much for being here. I love doing this. I love the financial freedom that this has given me, and I want to share that with you guys. So thank you so much for being here. If you enjoy the videos and want to see more of them, be sure to subscribe and tap the bell so you know when I post new videos. If you have any questions, put them in the comments below and would love to help you and answer any questions you may have. Be sure to give me a like, as it really helps the channel grow. Thank you so much, and remember, let's grow our wealth together. Take care, guys.